Hey, welcome back. Let me paint a picture that I know most of you have experienced. You're in a trade. Everything looks fine. The trend is moving in your direction. You're feeling good about it. Then, suddenly, the market does something unexpected. A candle closes somewhere it has never closed before. The structure looks different. Something has changed. But you are not sure what it means, so you hold. And then the market reverses hard against you and wipes out your profit, or worse, turns a winner into a loser. That moment of confusion when something changed on the chart and you did not know what it meant or what to do about it, that is exactly what we are fixing today. The two concepts we are covering are called break of structure and change of character. In the trading community, these are known as BOS and CHOCH. These are not just technical terms. They are the two most important signals for understanding when a trend is continuing and when it is ending, when to stay in a trade and when to get out, when to look for entries in the current direction and when to flip your bias completely. By the end of this masterclass, you will know exactly what break of structure means and how to identify it. You will know exactly what change of character means and why it is different. You will understand how to use both signals to make clear, confident trading decisions. And you will have a complete framework for reading trend continuation and trend reversal in real time. Let us get into it. The foundation you need first. Before we can talk about break of structure and change of character, we need to make sure the foundation is solid. Because both of these concepts are built entirely on market structure. And if market structure is not clear to you, nothing else will make sense. Quick recap of the foundation. Markets move in a series of swing highs and swing lows. A swing high is a peak with lower candles on both sides. A swing low is a trough with higher candles on both sides. In a bullish trend, price creates higher highs and higher lows. Each peak is higher than the last. Each pullback low is higher than the previous pullback low. Buyers are in consistent control. In a bearish trend, price creates lower highs and lower lows. Each trough is lower than the last. Each bounce high is lower than the previous bounce high. Sellers are in consistent control. Now here is the key question that break of structure and change of character both answer. When does that pattern change? When does a bullish trend show the first signs of weakness? When does a bearish trend show the first signs of recovery? When should you be on alert that the market is shifting gears? That is what BOS and CHOCH tell you. They are the two signals that tell you what is happening to the trend right now, in real time, not after the fact, not when it is too late. Understanding the difference between them and knowing when to act on each one is one of the most valuable skills in all of trading. Break of structure explained. Let us start with break of structure because this is the simpler of the two concepts. A break of structure simply means the current trend is continuing and the structure that defines that trend has just been confirmed again with a new high or a new low. In a bullish trend, a break of structure occurs when price pushes above the previous swing high. That new higher high is a break of structure to the upside. It confirms the bullish trend is still intact. Buyers just pushed price above the last peak. The higher high, higher low pattern is continuing. In a bearish trend, a break of structure occurs when price pushes below the previous swing low. That new lower low is a break of structure to the downside. It confirms the bearish trend is still intact. Sellers just pushed price below the last trough. The lower high, lower low pattern is continuing. Think of a break of structure as the market saying, yes, we are still going this way. The trend has just taken another step in the same direction it has been going. Here is how traders use break of structure practically. When you are in a long trade in a bullish trend and the market makes a new higher high, that break of structure to the upside tells you the trend is healthy. The reason you entered the trade is still valid. You can hold with confidence. You might even trail your stop up to protect more profit. When you are watching a bearish trend and price makes a new lower low, that break of structure to the downside tells you the sellers are still in control. If you are looking for short entries, you are still aligned with the trend direction. The setup you are looking for is still valid. Break of structure is trend confirmation. It is the market telling you keep going in the same direction. Change of character explained. Now here is where it gets critically important. Change of character is completely different from break of structure, and confusing the two is one of the most expensive mistakes a trader can make. A change of character is the first signal that the current trend may be ending and a new trend in the opposite direction may be beginning. Let me explain exactly what it looks like and why it matters. In a bearish trend, price has been making lower highs and lower lows. Sellers have been in consistent control. Every bounce gets sold. Every new low confirms the downtrend. Then something different happens. After making a new lower low, price bounces back up. But this time the bounce is different. It is more aggressive than previous bounces. It has more momentum and it pushes above the most recent lower high. That move above the most recent lower high in a previously bearish trend is a change of character. Why is this significant? Because in a bearish trend, the rule has been that bounces fail at lower highs. Every rally gets sold before it reaches the previous high. That is the definition of the downtrend. When price breaks above that lower high, it violates the rule that has been defining the trend. For the first time, buyers pushed higher than they have been allowed to go. Something changed. In a bullish trend, a change of character works the same way in reverse. Price has been making higher highs and higher lows. Then, after making a new higher high, the pullback does not hold at a higher low. Instead, it drops below the previous higher low. That move below the previous higher low in a bullish trend is a change of character. For the first time, sellers pushed lower than they have been allowed to go. Something changed. The change of character does not guarantee a full trend reversal, but it is the earliest possible warning that the trend is under real threat. It is the signal that tells you to stop adding to trend following trades and start watching carefully for what happens next. The critical difference between BOS and CHOCH. Let me make the difference between these two concepts absolutely crystal clear because this is where most traders get confused. Break of structure happens in the same direction as the current trend. It is a continuation signal. Change of character happens against the current trend. It is a potential reversal signal. Here is the simplest way to remember it. In a bullish trend, when price breaks above the previous swing high, that is a break of structure. The trend just confirmed itself by making a higher high. In a bullish trend, when price breaks below the previous swing low, that is a change of character. The trend just showed its first sign of weakness by making a lower low. In a bearish trend, when price breaks below the previous swing low, that is a break of structure. The trend just confirmed itself by making a lower low. In a bearish trend, when price breaks above the previous swing high, that is a change of character. The trend just showed its first sign of weakness by making a higher high. The practical application is this. When you see a break of structure, your response is to look for opportunities to continue trading in the direction of the trend. The trend is healthy. Find your next entry in the trend direction. When you see a change of character, your response is to stop looking for new trades in the current trend direction. The trend may be ending. Wait for more information. Look for evidence of the new potential trend forming before committing to trades in the new direction. Break of structure means stay the course. Change of character means pay attention. Something just shifted. From CHOCH to new trend confirmation. How to trade BOS and CHOCH in practice. Let me give you the exact practical framework for trading these signals. Trading a break of structure for trend continuation. You are in a bullish market. Price has been making higher highs and higher lows. Price pulls back to a higher low zone. You get your entry signal there. You are now in a long trade. Price moves up and breaks above the previous swing high. That is a break of structure to the upside. Your trade is confirmed. The trend just took another step forward. Your action at this point is to trail your stop loss up to just below the new higher low that forms after the break of structure. You are locking in more profit as the trend continues. You hold until either your trailing stop is hit or a change of character occurs. Trading a change of character for early trend reversal entries. You identify a downtrend, lower highs and lower lows clearly in place. Price makes a new lower low, but then the bounce that follows is unusually strong. It pushes aggressively above the most recent lower high. That is a change of character. You do not enter immediately. You wait. Price pulls back from the change of character high. If it forms a higher low and then starts moving back upward, that higher low is your entry zone. You enter long at the higher low with your stop below it. Your target is the change of character high and beyond. The risk to reward at this early reversal entry is often exceptional because you are getting in near the beginning of the new trend. This is how professional traders catch trend reversals early. Not by predicting them, by reading the structure signals as they form and acting on them systematically. Let me bring this entire masterclass together. Break of structure is a continuation signal. In a bullish trend, price breaks above the previous swing high. In a bearish trend, price breaks below the previous swing low. The trend just confirmed itself. Stay aligned with the trend direction. Change of character is a potential reversal signal. In a bullish trend, price breaks below the previous swing low. In a bearish trend, price breaks above the previous swing high. The trend just showed its first sign of weakness. Switch to observation mode. The full trend reversal process moves through 3 stages. Change of character first, then the first pullback and new structure forming in the opposite direction, then the first break of structure in the new direction, confirming the new trend. For practical trading, use break of structure to trail your stop and hold trend following trades with confidence. Use change of character to stop adding to trend trades and begin looking for early reversal entries at the first higher low or lower high that forms after the change of character. When you combine BOS and CHOCH with market structure, fair value gaps, order blocks, and liquidity concepts we have covered in previous videos, you have a complete institutional trading framework. Every trade has a clear reason. Every entry has a specific trigger. Every stop has a logical placement. And every target has a structural basis. That is what trading with a real system looks like. If this masterclass gave you genuine clarity on BOS and COSH, please hit that like button and subscribe. This is the kind of content that took years of experience to be able to explain simply and clearly. Drop a comment below and tell me this. On the last chart you looked at, was the market in a trending phase with clear break of structure signals? Or was there a recent change of character that changed the picture? Tell me in the comments. I read every single one. I will see you in the next one.